Hey there, fellow adventurers. Welcome to the Dollar Pilot YouTube channel, the channel where we navigate the world of budget-friendly brilliance. I'm your captain on this exciting journey. Today, we're going to talk about assets that are better than cash. Before we continue, please follow or subscribe this YouTube channel. If you're done, let's dive in. In the world of finance and investing, the age-old adage, cash is king, has been widely embraced. But as the financial landscape evolves, it's essential to reevaluate this belief and explore alternative assets that can outperform traditional cash holdings. In this video, we will take you on a journey through 7 assets that have proven to be better than keeping your cash idly in the bank. The game of money is complex, and to win, one must be strategic and open to new opportunities. In the past, cash was often viewed as the safest and most convenient asset. However, as inflation erodes its value over time, leaving your cash to sit idle in a bank account may not be the wisest financial decision. While cash has its advantages, such as liquidity and ease of use for day-to-day transactions, its long-term holding can expose you to the risk of losing purchasing power due to inflation. Historically, the average annual inflation rate has hovered around 3%, meaning that the value of cash diminishes by approximately that much each year. To safeguard your wealth and keep up with inflation, consider diversifying your investment portfolio with assets that have the potential to grow and provide better returns over time. What are better assets than cash? First asset class that has stood the test of time is precious metals. Gold, silver, platinum, and palladium have been coveted for centuries for their rarity and enduring value. Unlike fiat currencies, which can be easily influenced by government policies, precious metals tend to hold their value, making them a hedge against economic uncertainties. Prices of these precious metals only grow over time, given the demand and supply curve. Thus, this is an option that should never be ruled out. Next is S&P 500 Index. Holding an investment in the S&P 500 Index is often seen as better than holding cash due to the potential for higher returns and the power of compounding. Here's why. Over the long term, the S&P 500 Index, representing a broad diversification of the U.S. stock market, has provided significantly higher returns than the interest earned from holding cash in a traditional savings account. From its inception, the S&P 500 has had an average annual return of approximately 10% before inflation, including capital gains and dividends. The combination of reinvesting dividends and the long-term trend of upward growth means that your investment can grow exponentially over time due to the power of compounding. By holding the S&P 500, you're investing in 500 of the largest companies in the U.S. across a wide array of industries. This diversification reduces the risk associated with individual companies or sectors performing poorly. Next is real estate and land. When you start earning, there will be a bunch of people giving you free advice on investments, and at the top of the list will be investing in properties. Over the long term, real estate tends to increase in value. Historically, real estate overall has appreciated over the long term, leading to significant capital gains. If you rent out your real estate, you can generate a steady stream of income that is often higher than the interest you'd earn on cash in a bank. This rental income can help offset the property's costs and serve as a steady income stream, especially during retirement. Real estate is often seen as a good hedge against inflation. As the prices of goods and services increase, so does the cost of renting or buying property. So, the value of your real estate and the rental income you earn from it could increase along with inflation. Real estate investors can take advantage of various tax deductions, such as mortgage interest, property taxes, and costs associated with rental property management. In certain countries, there are also benefits like capital gains and tax exemptions when you sell your primary residence. Next is foreign currencies. One of the most widely accepted foreign currencies in the world is the United States dollar. But this major currency is subject to heavy fluctuations, depending on the nation's trade and the general economy. Apart from that, global economy also has its toll on the fluctuations brought on by the prices of commodities. In such cases, currencies with lesser fluctuations and lower inflation rates are a better option to invest in. An example would be Swiss franc and the euro. Investing in a foreign currency requires a fair amount of research. Carefully choose the currency depending on the economic, political, and speculation surrounding the country to which it belongs. Next is luxury items. We have all noticed our favorite celebrities wearing beautiful watches and walk out of the airports with designer handbags. They're not really trying to show off their wealth. Well, not in the typical sense, at least. These luxury items are investments. Their value lies in the rarity. The luxury brands do not produce items by the masses, so the resale value of the items, even 10 years from now, will only increase. In particular, luxury watches and handbags are a good real-time investment to make, and hence have made it to our list. Last is Bitcoin. Historically, Bitcoin has been a high-performing asset, offering potential benefits over holding cash in a bank. However, it also comes with a unique set of risks. Since its creation in 2009, Bitcoin has seen significant price appreciation. Though highly volatile, those who purchased Bitcoin early and held on through its ups and downs have seen substantial returns. Bitcoin operates on a decentralized network, meaning any government or central authority does not control it. Bitcoin is often likened to digital gold because it shares some characteristics with the precious metal. It's scarce, decentralized, and not linked to any specific economy. Bitcoin's growing adoption as a payment method by individuals and in the corporate world has increased its appeal as an investment. If this trend continues, demand for Bitcoin will grow. Potential buyers should consider their risk tolerance and financial goals carefully due to high volatility and dramatic price drops could happen. And there you have it. It's important to explore different avenues for wealth preservation and growth. While these assets offer unique advantages over holding cash, they also possess inherent risks and complexities. Hence, any investment decision should align with individual financial goals, risk tolerance, and understanding of the underlying asset. Diversifying one's portfolio across various asset classes remains a time-tested strategy for building wealth and safeguarding against economic uncertainty.